NYSE's parent company, the Intercontinental Exchange, or ICE for short, as we call it, the Nasdaq and the CBOE, all trading lower right now as a threat to their business now emerges from some of the biggest names in banking and markets, including these four. That includes Morgan Stanley, Virtu, E-Trade, and UBS. They are launching what they say is a lower cost exchange that will be called Members Exchange, or MEMX for short. Now, who better to discuss this than former UBS America's CEO and Fox News contributor Robert Wolf joining us today. So I don't even know how to shorten that. Is that MEMX in the future? Is that how we're going to say
I guess.
it? But is this about, I guess, protecting their fees? Because the NYSE, the Nasdaq have been increasing their fees over the year, and they're trying to have more say as well.
Yeah, this is not a surprise. For years, the large investment banks and the retail banks were trying to figure out what is the best way to disintermediate the exchanges and captivate all of that flow through them. Listen, if there's a way you have these two bookends, which is what I would say the wirehouses, so you have UBS, Merrill Lynch, B of A, and Morgan Stanley, the large wirehouses and private banks, and then on the right-hand side you have the retail brokers, E-Trade, Charles Schwab, Ameritrade. All of a sudden, you're combining kind of the big and the small together, and they're trying to say, listen, do we have a competitive advantage for our clients to change efficiencies and productivities? And I would say that the premise makes a lot of sense. When I was running UBS, that was something we always looked at. Is there a way to disintermediate and lower the fees for our clients?
And take back control as well, which is something that a lot of the brokerages and investment banks have been arguing for.
But we never did it when I was running it because competing against the New York Stock Exchange and the Nasdaq is not an easy thing to accomplish.
Because I think they already account for 3/5 of every stock on offer at this point.
Not only do they account for most of the volume, which doesn't mean you can't disintermediate and over time get a bigger volume, but also clients like to do business with those who know that, one, they're going to make sure that at the end of the day they settle all trades.
Liquidity is important.
Number three is, in this day of cybersecurity and nervousness, making sure that there's enough oomph and power behind the platform. So all of these things take place into an institution before they decide to say, okay, I'm going to trade with someone else.
Yeah, what about high-frequency trading? Because Virtu, probably one of the largest high-frequency traders on the market, they're part of this new exchange as well. So there's been a complaint, that high-frequency trading distorts the market. They get ahead of the retail investors. That's still going to be part of this new exchange.
Listen, speed matters. We used to say if you're at the front of the seat at the table, you get the best ideas.
But is it a level playing field if that's the case?
I think anyone can spend as much money as they want in technology to increase their speed. What's interesting is I think IEX was an independent exchange.
Right.
And they're at about 2.5% of the marketplace to date.
So not much.
So,
not much.
Enough, but I don't think they've increased all that much over since inception.
Yeah.
So it will be very interesting whether MEMX or whatever we call it.
Yeah, let's call it that.
Can really take the value away from the New York.
Okay, so the application has gone in. It's going to take a year for any approval, so we won't even see MEMX in operation until 2020. They say this is for the retail investors as well, like you and me. Mom and pops will also get advantages, and not just for the institutional clients, the BlackRocks and the trillion-dollar vanguards.
No question. I think that's why you see Fidelity involved, and TD Ameritrade, and Charles Schwab, and E-Trade, because if they can lower the pricing for their clients, then that is an incredible commercial that they're going to be able to have to their clients. Hey, come to us. We're cheaper, and we can execute just like the big boys.
What's cheaper? Because I don't see any fees. They haven't even identified what their fees will be in comparison to the NYSEs or the NASDAQs and the CBOEs.
Yeah, they haven't come out with fees, but they have said that will be much more competitive than where New York Stock Exchange and NASDAQ is. Whether they are or aren't, it will to be determined.
Okay, well, let's quickly talk about the Federal Reserve, because everyone's talking about Jerome Powell this year and what they're going to do with interest rates. Do you feel like they've been swayed by President Trump and they won't be raising interest rates in 2019?
I don't think they've been swayed by President Trump. I think just the opposite, because they have had 9 hikes. And they did one in December when he did not really want one done. Now, what they said recently, you can take both ways. They're in a wait-and-see policy. So we won't know until March likely what they do. Now, we'll see some ideas beforehand because we're going to see more economic numbers, Susan, coming out.
Yeah.
So I know the market rallied big both on the idea that there's trade meetings going on, and Powell said we're in a wait-and-see mode.
Right.
Wait-and-see mode can
well.
change in a day. If we get high economic indicators that show any type of inflation, trust me, there will be another rate hike.
Yeah, what about the government shutdown? Because some are thinking that this was going to impact consumer confidence at some point, and that will eventually filter through the economy, which is two-thirds powered by the U.S. consumer.
Listen, I'm not going to be partisan in any way. I was against the shutdown under Obama in 2013. I am against the shutdown today. It is not good for the economy. It is not fair to workers who are working each and every day and not sure they're going to get a paycheck. This is silly to me. This is all about politics. In my opinion, if I was the president, I would have agreed to what the Senate put through, which is opening up every agency and doing a continuing resolution on just Homeland Security and figure out how to cut a deal, both sides. My opinion that this is not good. And even the chairman of the CEA, Kevin Hassett, recently said it's costing us 0.1% of GDP each week as they continues to add up. I know everyone says, oh, we'll get it back. Well, we don't get it back.
Yeah, and we've been here before. We've seen the story play out. Robert, always a pleasure. Thank you so much.
Thank you for having me on.
Robert Wolf, they're the former CEO and chairman of UBS Americas.